Well, we've had quite the significant, more or less everything rally in risk assets on Wednesday following the red sweep in U.S. politics. And one thing that's also been lifting higher as a result, of course, one would imagine, is artificial intelligence stocks and robotic stocks. And this is a specific sort of angle that I like to look at it from an investment perspective and a trading perspective, which is a little bit more globally diversified. And I mentioned this ETF, the ticker symbol is BOTZ. Let me get right to it. A couple of days ago, and I just think I wanted to reiterate kind of A, that it's now broken out, and B, maybe what the next price target is from a purely trading perspective. Longer term, this can go, who knows, way much higher. But just kind of see where we are. Thought I'd update you in this. Obviously, a lot of things broke out yesterday, including the NASDAQ 100 and the S&P 500, small caps, and so on and so forth. But this is interesting because we're now seeing, on a daily closing basis, the first breakout in this consolidation phase, and which, by the way, there's a correlation here to tech stocks broadly. So the XLK ETF hasn't actually broken out yet, but the QQQ ETF has now broken out to a new daily closing high since basically consolidating since July. So BOTZ, I think a next measured upside target here, and again, this is now turning into a momentum trade, is probably closer to 35. So call that 5% from here. There's a lot of technical support down here. There's a lot of support from a structural flow perspective, something I've been talking to clients about yesterday and this morning, which is basically a lot of stock buybacks, little issuance. So that's a supply and demand dynamic that's favorable for higher stock prices. And of course, as usually this time of year, you have underperforming fund managers get what I call performance anxiety, which is a real thing. In other words, if you're underperforming your benchmark or your peers, and typically there's always a lot of people underperforming, it's just how it is, there's a basically a need to chase. And I think this year, in particular, we had a situation where, as I've mentioned many times, we didn't really have any pullbacks in the month of October of any meaningful size. I think we had a peak to trough 3%. That doesn't even count. Yet people were de-risking going into the election. And plenty of institutional investors that I know didn't actually buy stocks throughout the month of October. So you have this pent-up demand that I think is constructive here for risk assets. It's a momentum trade. I think at some point once we get into 2025, not like on day one, but within a couple of months, 3 months or so, 4 months, we'll see. We'll start to see probably a bit of a different dynamic. But for right now, this momentum seems to be good. BOTZ, hope it helps. See you again soon.